Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is a business owner, syndicator, and investment and tax strategist, Dave Zook. Now, Dave and his team at the Real Asset Investor specialize in a variety of asset classes, including ATM machines, car washes, energy, self-storage, and a number of others. In fact, he and his team are one of the top 4 ATM fund operators in the U.S. Dave is a sought-out speaker and has shared his knowledge across various media platforms such as the International Business Conference, the Real Estate Guys radio show, Cashflow Ninja, and many others. Additionally, Dave is also a fellow Pennsylvanian. Don't know if that's really a word or not, but ultimately, Dave is from Pennsylvania, lives in Lancaster, PA, with his wife and his 4 daughters. And so with that, I'd like to welcome Dave Zook to the show. Dave, how you doing today?
Good, Kevin. Thanks for having me back on your show. I'm looking forward to it.
Pennsylvanian. I don't know if that's a word or not, but yeah, I thought that was very fitting. So, and the funny thing is that most folks refer to it as Lancaster, right? I think is that when you live there? Do you call it Lancaster? Or I know it's really Lancaster, but I feel like growing up, it just kind of rolled off the tongue as Lancaster. But then you realize as you get older, you're like, that's not a correct pronunciation. So
yeah, you can kind of tell who doesn't live here usually. So yeah, there's a couple more syllables thrown in there when you don't live here, but yeah, it just kind of rolls out when you live here.
yeah, that's funny. Good deal. And then I always make this joke when I talk to St. Orson, PA, and everyone that's listening, and you probably heard me made this joke before, but and maybe I'm wrong, but no one's corrected me yet. But I believe that Pennsylvania, when you're from Pennsylvania, it's the only state I've ever known of where if you're from there, you just commonly refer to it as PA, and you do it to other unassuming folks that aren't from Pennsylvania, and they're like, what's PA? And you have to, I'm from Pennsylvania. Sorry, that's just what we call it. I'm from PA, right?
Nobody ever says from your hometown that I'm from FL, right?
No, no, FL, CA, SC. I mean, like, no, that just doesn't happen. PA is the only one, and it makes sense if you're from PA, right? It sounds good.
Yeah.
Well, good deal, Dave. Well, excited to have you back here. We find ourselves in some interesting times as we roll through this stage of the cycle, and so excited to have some conversation, dialogue around that, and get your perspective and find out what you guys are doing in your business. But before we do that, just in case there's anyone listening that doesn't know about you, your background, what it is you do, maybe take a few moments and tell us a little more about yourself.
So I grew up in the modular building business. My dad bought the business the year I was born, and I grew up in that business and kind of worked throughout all facets of the business and ended up becoming a partner when I was in my 20s. And during that time, I built a couple other businesses. And, when I was in my late 20s, early 30s, I started getting, some of these businesses started doing really well. And I ended up having to pay $500,000 a year in tax, and I got tired of that quick. And so I did a deep dive, and I had decided early on, even back when I was a teenager, that I wasn't going to be a real estate investor. And the reason was that my dad was a real estate investor. He basically took the money that he made from his modular building business, and he bought farms and land and some local single family homes, and he self-managed those single family homes. I quickly realized that wasn't going to be me when I grow up. And so I was building businesses, making a lot of money, paying a lot of tax, got tired of it. So I dug into it a little deeper, and I realized the people who were making a lot of money and not paying tax were using real estate to help keep themselves tax efficient, using depreciation, cost sake studies, all that stuff. So I went down that rabbit trail, and when I realized that you could use real estate to keep yourself tax efficient, all of a sudden I went from not wanting to be a real estate investor to now I couldn't get enough of it, and quickly went from paying $500,000 a year to paying zero. And all while I was, increasing and multiplying my income, and I've stayed tax efficient ever since. So it's been quite a journey, but that's my story. And I really, now I travel around the country, and of course you and I bump into each other here and there, and that's really what I teach is, investing for cash flow and equity growth, and and really tax efficiency, how to keep,
Hmm.
how to make millions of dollars a year and pay no tax.
Yeah, it's a beautiful thing. It's a beautiful. So, just curious, your father, you kind of saw it through your eyes that, his real estate investing venture was not necessarily not necessarily even the most tax efficient, but just efficient from a management perspective. You said, I don't want to do that. So just curious as you took that deep dive to learn about all the tax benefits that real estate can offer. Where did you first land? I mean, what was the first vehicle or type of vehicle that you set your sights on to start helping gain some tax efficiency in your business?
So I started reading, I started attending webinars, live events. I read Rich Dad Poor Dad, and it drove me crazy when Robert Kiyosaki said you can make millions of dollars a year and pay no tax. And so I thought, if he's doing it, then that means it's possible.
Mm-hmm.
And probably the quickest way I could figure out how he's doing it is get around him. And so I ended up I was listening, of course I was listening to podcasts and all kinds of stuff, trying to get my mind around this stuff. And I remember hearing an ad on the Real Estate Guys radio about this summit at sea, and I was like, yeah, that'd be fun, but there's no way I'm gonna, I'll be able to get away for 8 days on a cruise ship. But when because I was running several different businesses and very involved, neck deep in operations and all that good stuff. But when they announced that Robert Kiyosaki, his CPA, Kenny McElroy, those guys are all friends of mine now, but they were all going to be on the boat. And I was like, you know what, whatever it takes, I'm out. I mean, I'm out of here. I'll do whatever it takes. I'll drop whatever I got to drop, and I'll be there. So I went on the cruise and spent a week on the cruise ship, hanging out with Tom Wheelwright and the Rich Dad team. And I mean, it opened some doors for me, and it changed my life. I mean, I started, really studying and reading what they were reading and studying, and got myself to the point where I'm tax efficient. Have been ever since.
That's great. That's great. And I bet that your business didn't fall apart when you were away for those 8 days either, did it?
You know, us entrepreneurs, we have this weakness. We think that we're the only people that can do it right. And
Yep.
I've grown up a lot since then, but no, we were just fine. In fact, um, now I'm at the point where I realize that if I could put good people in place and just train them and get out of their way, they can do it better than I can.
Yeah, so two big life lessons that were learned. First, a lot about tax efficiency, getting around other folks that were doing what you wanted to do, and then also that your business, that again, that there's other people that will step up to the plate in your absence, and your world will fall apart when you leave it for 7 or 8 days. So that's awesome. I love it. So we find ourselves today, Dave, in some fairly interesting times. Very challenging capital markets. We seem to keep breaking records, with the 5 and 10 year, and just, it's tough. It's tough to get deals to pencil out at this point in time. There is some distress, but not seemingly, at least I haven't seen enough distress yet, that has warranted great buying opportunities, at least not in the asset classes that we buy in. If you want to go buy an office tower in a downtown area, you could probably get a great deal on it compared to what it would have traded for in 2018. But I don't think that's necessarily the case with most other asset classes. So we just would love to, get a sense of maybe what your business looks like today in comparison to maybe what you were doing 6 to 8, 12 months ago, and just any pivotal changes that you've made inside the business and what have you.
Yeah, so as you mentioned, capital markets are challenging. It's a lot harder to get stuff done than it was a year and a half ago, a year ago. Um, I mean, and one of the things, I was speaking at a conference just over the weekend, and I mentioned that just because it was valued, whatever the asset is, just because asset was valued at $10 doesn't mean that it's worth $8 today. And so, just to, you mentioned about having trouble getting those deals to pencil. You just, really, when you're going into an asset class and deciding to take down an asset, you got to build in some margin. And that's tough in this market because there's still some of that buyer and seller sort of, the thing hasn't quite come into equilibrium yet. It's coming. It's starting to show where the buyers, where the seller's expectation isn't quite as high as it was, 6-12 months ago. But I believe it has a ways to go yet before we get to the point where you're going to see real value in the marketplace. The other thing too is many people think that the real estate market bottomed out in 2009. When you're talking about commercial real estate, and really, that's what you hear, and that's what most people remember, because in 2009, and whatever it was, March 19th or March 9th in 2009 is when the market bottomed out, and then it started its correction. But the real estate, commercial real estate, like, the big stuff that we buy, multifamily and self-storage and mobile home, those type of commercial assets, they didn't really bottom out and start that climb till 2012.
Yeah.
And
Yep.
so, what are we doing in the self-storage space? I mean, look, we're not accumulating at the pace that we were. And we're having to find ways to find assets that to give us more of an opportunity to add value to them, force value to them, because you just can't go into an asset that's performing right now and expect to get a good deal. You got to force some kind of value. So the bigger that sort of arbitrage of where the asset is now and where we think we can take it, the more opportunity, and that's where we're focused right now.
Yeah. How about even your future projections on any self? We can speak to self storage only because there was a recent article, I think it was put up by CoStar, but within the last week and a half, about just rents or rates really softening and kind of leveling out. And I know that they paint a broad brush stroke. Every market's different than the next, and so like it's market specific per se, but generally speaking, are you seeing a less aggressive rent growth on your pro formas when you guys are modeling something out than what you would have maybe back in 2021 or 22?
Oh, for sure. I mean, the growth that we've seen in 2020, 21, and the first half of 2022 was unprecedented. I mean, it was the kind of growth, and we've seen it across several different sectors. We've seen it in our business, in our modular business. That kind of growth was not sustainable. So when we look at a 10-year chart now, sure, it came off of its highs, and it's certainly softer than it was in the last 2 years, but we're still above the 4 and 5 year highs. So yeah, we had that huge spike in 21 and 22, in 2020 and to 22. And has it cooled off from that? Yes, but when they say, and look, I read the same stuff, but when you look at the charts and see, when you get that, if you look at a 12-year, I mean a 12-month picture, that tells you one story. When you look at a 5, 6, 8-year chart, it tells you another story. And so the self-storage space is doing quite well, performing solid. It's a localized market.
Sure.
So like you said, they paint it with a broad brush, and sometimes you got to read between the lines.
Yeah. What advice would you give? I know that you're in the middle of maybe seeking out some debt options for a few acquisitions. I mean, what advice would you give those that are out there in seek of the same thing, or are going to be maybe here in the near future, as to how to track down the best options that exist today? And it's an interesting question, because I always say it's great to establish local relationships, and whether you are only investing local or not, we've got a few local banks that will actually follow us around the different markets outside of the state of Florida. And they'd always been our go-to. If it wasn't fit for agency debt, they were typically our go-to. And they just made it really easy. They knew us. However, we find ourselves in a situation today where that's not really the option. And we've got a few other banks we've worked with historically, but we're running against some brick walls and having to seek out lenders that we haven't yet worked with before, which is creates trepidation. You don't know what you don't know if you're working with a bank that you've never worked with before. Plus, you got this uncertainty in the marketplace, and I feel like at any point in time, the rug could be pulled out from underneath you. And so, any advice or anything that you guys are doing that might be unique or that you feel might be valuable for the folks that are listening in to as they go down this path that they might be able to implement some of the strategies you guys are doing to find the best options available today.
Yeah, so a couple things there. I don't think now is the time yet to go on an asset grab, to really
Mm-hmm.
aggressively shop for assets and really accumulate assets. You want to be very careful and be very selective in the assets that you pick up. So that's one thing. The other thing is, um, if you focus on your operations, and you know this, I mean, if you focus on your operations and really, if you got stuff in your portfolio that needs stabilized, if you got stuff that needs buttoned up, button that stuff up tight,
That's it.
because the better you're running your ship, the more the better the chances that a bank is going to look at you and say, yep, we'll do the next deal with you. So for those two reasons, I would say, look, just now is not the time to just go out there and grab assets and put anything in your portfolio that's for sale. There will be a time like that again, I believe, but it's not today yet. So I said,
Mhm.
just focus on operations, run your ship as efficiently tight
Yeah.
as you can, get those margins up, and the banks will look at that and they'll reward you for it, and they'll want to do business with you.
No, that's a great point. And the heyday of the last couple of years when everyone's growing their portfolio and not, we always focus on operations, right? That's an integral part of the business. One doesn't exist without the other, but great point about getting your operational house in order. Like now you have the time, right? I mean, there's not as many opportunities to be looking at. And so, shift all your focus resources and pull some resources over here that we're working on the acquisition side, but put the energy into your existing assets. We were just talking internally the other day, and I think this is probably applicable to any groups out there that have grown portfolios over the last, call it 5 or 10 years, is that there's still low hanging fruit in everyone's portfolio, even if they only own one or two properties. I guarantee there's still some low hanging fruit there that hasn't been tapped into yet. And so just put the emphasis on that and extract as much value as possible. And just get you in a good situation, a good state for when opportunities do come back, you can shift that focus back over to buying and know that your ship's sailing and not sinking. So
100%. I
yeah.
agree with.
So what give me your crystal ball, bud. I know that no one's got the most functional crystal ball, but would love to hear your perspective the next 12 to 24 months. What do you think rates will do? I know that I think I was listening to the most recent TREP podcast, and they're saying that they're anticipating another 25 basis point jump before the end of the year, and then maybe we'll be at we'll be in the Fed's eyes of taming inflation, and maybe we'll start seeing the other, the other side rolling downwards sometime over the next 12 months. But what are your thoughts there? And just again, we're not economists. I'm not. You're not. But if you were, what would you say?
So one of the things I've learned over the last 3 years about predictions is, don't make them.
Yeah.
But look, I mean, I probably read the same stuff you read, and I wouldn't be shocked if they went up another 25 to 50 basis points. At some point, um, I believe something will break, and we've seen some of that in the last 12 months where, you know, some stuff broke, not at scale, not a big, large volume, but when you're talking about assets and different asset classes that, look, if you and I believe there will be opportunities in the market in the next 12 to 24 months to buy good assets at a better price
Mm-hmm.
then in the future than you can now. Um, but I mean, I am not so much worried about what my portfolio is in a position. I don't have adjustable rates. I don't have
Mm-hmm.
my portfolio is in a position where I am not laying in bed awake at night, hoping that they don't go up another 50 basis points. But I want to adjust my strategy, depending on what happens, depending on what they do.
Yep.
Because the more stress that the more they go up, the more stress there's going to be in the marketplace, and the more that opens up doors and potential opportunities for investors who have cash.
Yeah.
So now is a good time. We talked about buttoning up your operation. Now's a good time to have some cash around too.
Yeah. Is your group still buying multifamily, or are you mostly focused on self storage? And I know that we can talk about ATMs as well, but kind of where's your core focus lie?
So I had built a portfolio of 3 to 4,000, between 3 and 4,000 doors in the multifamily space, and I sold everything just prior to 2022, coming down toward the end of 2021. Um, I started selling in 19 and 20, and then was totally exited by the end of 21. Um, we're still buying self storage assets, a little slower than we were, 18 months ago. Um, there's still lots of opportunity in the ATM space. We love that space. We're very active in that space. We're number 4 now in the country in terms of size, and we're building a bunch of Tommy's Express car washes. We've
Mhm.
been doing that over the last several years, and we're by the end of this year, we should be number 2 in size for the entire Tommy's organization, and I believe by next year, the end of next year, we'll be number 1 in their organization. So we're uh, we're on pace to build 80 to 100 car washes in the next 5 years.
That's awesome. I love the car wash space. I've got some personal capital in the car wash space, and the question I think that comes up quite often, and most of the time from folks that don't understand the they're all investment side of that business is, when is enough too much, right? As far as car wash, because anyone that's listening here, more than likely, if you live in a decent sized primary or even secondary market, there's probably at least one express car wash, when probably another one or two or three under construction, different phases of construction. And so I mean, do you think there's a point in time where there becomes an excess supply? And if so, what allows one car wash to win out over another?
Yeah, so there will be a time when there is enough that but from the market studies that we're doing, we're not nearly there yet.
Mm-hmm.
And even when there's car washes in a market, oftentimes when you see 3, 4, 5 car washes in a, kind of general area of the city, secondary, tertiary cities is where we're kind of focused. But even when you see that, the kinds of car washes that we're often seeing in those places are not real competition for a Tommy's Express car wash.
Curious.
We we
Curious
just
as to why. Yeah, I've never been through a Tommy, so I know I've seen a few. There's not one immediately in mind, like where I live, within a proximity of me going to get my car washed, but I've been to a few other express, no major, no like national brands, but no local brands and things like that. But just curious as to what Tommy's does different.
So it's a very efficient way to get your car clean in a very short amount of time. So what we do is we buy some of the best real estate and the best stretch of town, and we like the corner lot where ingress egress is
Mhm.
very convenient. We like to go where people are going anyway. As you can imagine, car wash isn't a destination. It's something that you get done while you're right there in that part of town. They're bright, they're clean, the technology is some of the best in the industry, and they're really the business model is designed such that you can pull off the road and in 2 to 3 minutes be back on the road with a clean car. And
Hmm.
so we can put 2 to 300 cars per hour uh, through our car wash with 2 to 3 people. And so it's a very efficient way to get a really good quality wash. There's nobody wiping interiors, washing the exterior by hand, any of that. You just get a really good quality wash in 2 to 3 minutes.
Yeah, no, that's great. You probably know a little more of the history of I do, but interestingly enough, I did a series on car washes. This is probably 6 years ago now. I interviewed a number of different folks, and this is before the express car wash, it was around. It's been around, but it wasn't nearly as big as what it is at present time. And interestingly enough, I interviewed the founder of, I believe is it Autobell Car Wash. I think they're based in the Carolinas. They're fairly significant in size. They were, at least, probably not, as large as maybe some of the other outfits out there nowadays. And they kind of have the broad range of different types of washes. They've got full service, they've got some express, and they've got, I don't know, whatever is in the middle there. But either way, the founder, I told him, I said, I'll be honest with you. I have not used a drive-through car wash since I was probably a teenager, since I was 16 years old, because all I remember is, the car wash at the gas station. You have like the brushes. Either your car gets scratched up or it goes in dirty and it comes out dirty, or both, right? Like it wasn't very effective actually cleaning the car. And so I always saw it as a waste of money to go to a place like that. And I kind of lumped the express car wash model into that same bucket. And so anytime I would ever go get my vehicle washed, I would go to one of the full service places that, you let it go through the tunnel, comes out the other end. You've got, a bunch of people like wiping it down, dressing the tires, but you're there for 30 minutes, right? Like it's definitely like a Saturday or Sunday. I got a free hour. Let me go do this. But it's definitely not quick and efficient. With that being said, he suggested I go, and there was one down the street from my office, and he suggested I go run my car through it. It was during pollen season, and so the car was just yellow. And I went through, and I was blown away. I think it was $8 or $9, and I just got whatever the basic wash was, and I was absolutely blown away. I wouldn't say it got to 100%, but it was definitely like 95% effective. I mean, it got even like, it got the wheels, and I was very impressed with the technology. And so just curious as to when the industry really made, the pivotal shift in kind of subpar to very efficient and very quality wash.
So I would guess within the last 5 or 6 years, maybe 8 years. And of
Okay.
course, it's getting better all the time.
Yeah.
When I first started even considering getting into the car wash space, I made it a mission to take my car through, 6 or 8 car washes in my hometown and figure out what I liked and what I didn't like about the different car washes. And there was some that were just downright terrible. And then there was a couple that did a decent job. But there is a huge variation between the touchless car washes and the kind of quality that you get or don't. And so that's what I'm talking about. Like, and really a car wash is really set up to service a 5 to 7 mile range. So when you, back to your question about how much is enough, well, it's a local business, and
Mm-hmm.
it covers 5 to 7 miles, range. And when you get into an area that has some of those subpar qualities, and you move in with a Tommy's, nice, bright, new, best equipment on the market, great technology, those people just, they're going to have the same experience you did, the same experience I did when I went around shopping, and they'll quickly realize and appreciate the quality that's in a Tommy's, and they'll steal a lot of business from the others in town.
Is the price, right in line with others, as far as Tommy's concerned? Is it's like higher? I mean, just wondering what the playing field looks like.
Yeah, so you can get a lower end wash that'll get you a decent wash all the way to the full out tire shine with wax, and you know eh, and that's going to be somewhere around $20. So you can range,
Yeah.
your range is going to be somewhere between 8 and $25.
Gotcha. No, very intriguing. And then real quick here before we wrap it up, want to be conscious of the time here, but just curious about ATMs. Again, as we whether you believe that we're in a recession or that we're entering into recession, that will be there at some point in time, what have you. Talk to me about ATMs and just the performance of them, maybe a year ago to what's happening today, and then what you forecast here over the next couple of years as we go through some more challenging times.
Yeah, so ATMs have been an asset class that have done really well in past recessions, pandemics, in times of distress. Um, the other thing too is we're seeing our demographic, the people that we serve, unbanked, underbanked, immigrants, lower income, EBT card carriers, that group, that's one of the fastest growing groups in this country. And there's also more cash in circulation than there's ever been before in human history. So when you kind of, bring those two together, you can kind of, understand the business model. Because you and I mean, I would guess most of the people that are listening to this, we don't use much cash. And in fact,
No,
I rarely use cash.
I have no
But
cash in my
this,
wallet at this point in
yeah,
time.
yeah, but this group does. And the other thing too that we talked about new technology in car washes. There's new technology coming all the time in ATMs. There's more and more uses that and ways you can monetize an ATM and the services that they bring. You're talking about check cashing. You're talking about sending money
Hmm.
overseas. We talked about immigrants using the ATMs instead of you know carving off a chunk of your paycheck to Western Union, the old Western Union model. You can now for $2 or $3 send money
Oh,
overseas,
wow.
back to Mexico, whatever. But there's also a very interesting technology that we're starting to implement into our ATM portfolio, and that is the bank in a box model. And that is where, let's say you have a convenience store and you're dealing with a lot of cash. You're in that neighborhood, the people that I just described, right? So, we're talking about ATMs is really a real estate play. You're monetizing a 2 foot by 2 foot piece of real estate, right?
Hmm.
So, what's the three most important things about real estate? Is location, location, location. Well, you got to be in this neighborhood where these people are, right? So, okay, so now you're the convenience store owner and you're dealing with a lot of cash. And come lunchtime or at the end of the day, you normally would have armored car coming in to take your cash out of there for you. Well, we got this ATM set up where there's a vault in the ATM. And now that convenience store owner can put his cash into our vault, right? So now he's getting rid of a major cost of his. Armored car is expensive, and that's one of our highest costs in the ATM business is armored car and the cost of cash, especially now. I mean, the cost of cash went up. We talked about that some with interest rates. But so now you've got two parties coming together. You're fixing a problem for the store owner. You're taking away one of his bigger costs. You're fixing a problem on our side, taking away one of our bigger costs, eliminating in some cases the cost of armored car. You're giving him a bank. We're charging a small fee for him to use it, to have that luxury of not, he's basically got a line of credit. So
Yeah.
it's a win all the way around. In fact, you even have different convenience stores on that same block that come to use their little bank. And now, not only do you eliminate or reduce the cost of armored car, in some cases eliminate it, but now you're getting to use that cash as well. So now your cost of cash goes way down as well. So there's a lot of technology and there are a lot of new things coming into play, and a lot of ways that we've learned to a lot of services that we've gotten to monetize over the last couple of years that were unheard of 10 years ago.
Yeah, that's a beautiful thing. No, I didn't even think of that. I was not aware that that was one of the strategies of that space. So very interesting. No, I appreciate you sharing that. And so, kind of wrapping it up with this, Dave, obviously we've covered a good bit in a short period of time. For those that want to learn more about you and your company and the different things that you guys offer and that you have going on, where's the best place to find you?
So our website is therealassetinvestor.com. And if you want to reach out to anyone on our team, you will get a response. Send an email to info@therealassetinvestor.com. Somebody will reach out to you.
All righty. Fantastic. Well, Dave, as always, it's a pleasure. I appreciate you coming on, my friend.
Thanks for having me back.
Alrighty, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.